In this video, we're going to cover returns, refunds, and exchanges. We're going to look at workflow, inventory, and accounting. First, let's clarify the terminology we'll be using. We're going to be paying money back to a customer, which we call a refund. In other words, keep the goods and we'll give you your money back, either all of it or part of it. We'll be receiving inventory from a customer, which we call a return, which is essentially the customer sending us the goods back and then we'll refund you. And then finally, we'll be sending new goods to replace a return, and that's what we call an exchange. Let's begin with a straightforward refund. You just want to give some money back to the customer. Whenever you're working with refunds, just like payments, there are a couple of options. The first is where your payment provider is not integrated with Brightpearl. You'll have to refund the payment via the payment provider and then manually create a record for the refund in Brightpearl. The second approach is where your payment provider is integrated, perhaps using Stripe or Authorized.net with the Brightpearl Payments app, for example. All you need to do is use the Payments app to perform the refund, and the accounting is done for you. First, we'll look at the method where you have to refund outside of Brightpearl. Go to your payment provider and refund the payment. If the refund is for an order that is not yet shipped and not yet invoiced, then you can make changes to the order and perform the refund from the order screen. Let's say this customer has phoned up to change delivery address and switch to a slower shipping method, which is cheaper. All you need to do is reduce the order total and save. You can see that they've paid $50, but the order is now only $45. So hit the Take Payment button, choose your payment method, and put a reversal in for the amount that you're refunding. The order total and the payment total now match. Because the order is not shipped and not invoiced, you could also change items if you wanted. Remember, you should only make changes to the original order if items have not shipped and the order isn't invoiced. If the order has been shipped or invoiced, then what you'll need to do is create a new credit order or quick credit. The quick credit approach is fast, but quick credits cannot be printed or emailed and cannot have notes. They just create accounting transactions. Credit orders give you more flexibility and more options for notes and custom fields, so it's the recommended method. If you want to create a brand new credit that's not associated with any previous order, choose either from the Sales New Credit menu, or from the Orders Mini tab, choose to create a new credit. Most of the time, you'll want to associate your credit with the parent sales order, so find the parent order first, which is the one we're looking at here. Clone the sale using the drop-down option under the Save button. The parent order has been set, the status is set to whatever you've got in your sales settings, and notes have been added. For the pure refund scenario, we won't be receiving any products back from the customer, so we'll remove the lines by setting the quantity to 0 and saving. Add a comment line with details of the refund. Change the account code if you want. If the original order was allocated a sales channel, then the credit will also have the same channel. Save the order. And now all you need to do is record the refund that you already made via your payment provider. Click the refund button and choose the payment method. If your payment provider integration supports refunds, you'll be able to do the refund here instead of doing it separately. This creates a journal of type SR against accounts receivable to record the movement of funds out of the selected bank account. It's not the end of the process though, we also need to close the credit order. All you need to do is click Credit. This will close the order and post accounting for the revenue and the tax. Here are both transactions, one SR for the money given back to the customer and one SC for revenue and tax. This particular one doesn't have any tax on it. So that was a simple refund where we don't have any goods moving around. Now we'll see what to do when the customer is returning items. Find the original sales order. Here's one that's been invoiced and shipped. Select the items that are due to be returned and click Clone to Sales Credit. A new credit will be created, and just like before, it's been given a parent ID and notes have been added. If you want to send the customer any documentation for them to put in with the goods, perhaps an RMA, click Email Print. Just like printing invoices or any other documents, you can change the template and customize the look and feel. A copy of the document is added to the credit with some notes. If you're refunding now, then do the refund as before by hitting the refund button. If you're going to wait until the goods arrive, set the credit to a suitable status and wait for the items. When the items do arrive, click to receive the inventory. Here you've got three choices: make available for sale in the selected warehouse, write the items off, or place them into quarantine. Making the items available for sale will simply add them into stock, creating an SG journal for the increase in asset value. The asset value comes from the cost price list. Unless Lo-Fi last out first in, costing has been turned on in sales settings. If Lo-Fi costing is used, the actual cost price of the last shipped item will be used. Writing off the items will create the same SG journal when the items are added into stock, and then a PG journal to write them off. The SG account codes come from the product and match those on the original sales order. The PG journal uses the same stock code and moves the value to the code you've selected in accounting settings for writing off inventory. Here it's 5202. The reason you gave during the write-off is also visible on the journal. Here's what the inventory audit trail looks like for the write-off: one into stock and one out of stock. Using the quarantine option, we'll create an SG journal, but the items won't be available for sale until they're released from the inventory in transit report. Once you've checked the items in quarantine, you need to release them into stock. Visit Products, Inventory in Transit, select the items you want to receive and hit Release. It's important to know you have to filter this by warehouse first. When you receive the goods, they'll be moved into the default stock location for that item. If the items are actually not sellable, write them off using a further stock adjustment. Just as for refunds without inventory, to complete the process, you should close the credit. There's a credit reference, which means that the accounting transactions have been made, and we can see that items have been received using the green box or the information down here. The last workflow we'll look at is exchanges. This is where customers return an item and you send a replacement. The replacement won't necessarily be the same price, so we'll see how to handle price differences as well. Here's an order where a customer has bought a couple of items, one of which is the wrong size. They'd like to return the small for a medium. The order is invoiced and shipped, so you'll need to create a new credit. Select the line and click Clone to Sales Credit. The small item is $10 and the medium is going to be $12. I'll show you how that works out. Let's park the credit on awaiting goods from customer and send out the medium item right away. We need to create a new order for the medium item. Let's copy the original sale so there's a record, and so that any channel assignments are also retained. You can either clone the whole sale from the drop-down button and then remove all of the items, or if it's a long order it might be quicker to choose any single item and then hit Clone to Sales Order. We want to create the new sale on a suitable status and deliver it to the customer address. Remove the item you cloned and then add the item you're going to send. Let's choose the medium. Now we'll fulfill the order to create a goods out note which will be shipped off to the customer. Leave the item price as it is. If it's the same as the small item, everything will balance out. In this example, the replacement costs $2 more, so what we'll do is we'll take $2 payment now for the difference. The rest of the payment will be matched by the value of the returned item. If you wanted to add a restocking fee or exchange shipment amount, then add it to this order and also take payment now. The payment we've just taken will create an SR journal against the relevant bank account. If the new item is cheaper than the original, you can't record the refund here. You'll need to do it from the payment allocation screen after everything is invoiced. I'll show you that later in the video. The next step is to close both the credit and the new sales order. So let's close the sales order and close the credit for the small item we're expecting back from the customer. Here's the accounting for this customer so far. The bottom SI is the original sales order with everything on it. The next SR, the sales receipt, is the $2 we took for the extra payment. The next SI is the sales invoice for the replacement item, and then the SC, the sales credit, was for the returned small item. The customer balance is now 0. However, if we click into the Allocate Payment screen, there are still open invoices. It's good practice to tidy up and allocate them against each other. Because there's no amount to pay, we don't have to choose a bank account. Although we've fulfilled the replacement medium item, it's not yet been shipped, so let's do that now. That creates a GO journal, just like any other shipment, and removes the asset from your inventory. When the small item later arrives, we receive inventory. We'll make it available for sale in the warehouse. And that gives us an SG journal in the same way that we saw earlier in the video for standard returns. In order to report on why your customers are returning goods, you'll need to add a custom field, which can be used on sales credits. We recommend this as a select list so you have consistent values. When you create the sales credit, choose the right option. You can filter the sales credit list by custom fields, and you can also add the custom field as a configurable column on the sales details list. I mentioned earlier that you can't refund from within the replacement order if the replacement item is cheaper than the one that's being returned, so you'll need to do it from the payment allocation screen. Here's how. This customer bought something at $20, which he's returned. I've invoiced the credit to create the SC, and then I've shipped him a new item which only costs $16. I invoiced the new order, which leaves $4 on account. So what we have to do now is we have to refund him. Click to pay both of these orders, choose the bank account from which you're going to be refunding, and then submit. Because the payment is less than 0, it means we're paying money out. As simple as that. If you're using Brightpearl WMS for your warehouse, then everything is the same as I've shown you so far, except for the fact that you receive the goods against the credit using the WMS screens, rather than receiving inventory in back office. You can either create your credit order in the back office early on in the process when the customer first requests it, and then you can find it in WMS later to create a delivery against, or you can just create a new credit order in WMS when the goods arrive by cloning the items on a sale. The accounting and inventory process is the same. And that takes us to the end of the video about returns, refunds and exchanges.